February, March, April of 2020, I thought would never be duplicated. It was unlike anything that anyone in this industry had ever experienced, but I'll tell you, it was child's play to what we've experienced lately.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update, and with us today is our president, Andy Schectman. Andy, how are you doing today?
Elijah, good to talk to you. I'm all right. I'm busier than a one-legged cowboy in a butt-kicking contest, but I am hanging in there.
Definitely. We were just talking about how, this is probably the busiest week you've seen ever at Miles Franklin. Tell us a little bit about that.
Yeah, what I saw in February, March, April of 2020, I thought would never be duplicated. I remember one night in mid-February, working until 4 a.m. in my office, my wife calling me repetitively, "Where are you? What's going on?" And trying to say to her, "You just don't understand. You just don't understand." This is right before COVID became really pronounced, and we hadn't quite yet retreated to our homes. And that really, I think, defined 2020 in many ways. Was just nonstop demand, working really hard, 15, 18 hours a day, pretty much 7 days a week. It was unlike anything that anyone in this industry had ever experienced, but I'll tell you, it was child's play to what we've experienced lately. Over the past week, my entire staff has, for the most part, worked all day, every day, 7 days a week, with the exception of sleeping. And it's a blessing. I feel very fortunate. It's also disconcerting. It is also very exhausting. The level of demand is blowing off the seams, and it's really interesting. You look at the amount of metal going into GLD and SLV, record amounts, huge amounts. You look at the amount of demand in the retail industry. It's insanity. I talked to a lady the other day who told me she had waited on she was trying to get through to us. She couldn't get through to us. She called a competitor, waited on the phone for 7 hours, and when she was finally connected, was disconnected. And then fortunately got through with us. She had been trying for days to get through to somebody. That's what it's like. Our biggest concern over the past 7 days is how do we get back to people? I had to call an emergency meeting last week and tell all of my brokers that you guys need to work through the weekend. You need to take calls until late at night. This is a opportunity that we cannot blow. That I never thought I'd ever be calling people and begging them to work much harder and much longer, because we have so many emails and so many phone calls that we haven't been able to get back to people for as much as 1 or 2 days now. I think we've finally almost caught up, but it continues today. I have another 50 to 100 emails that I need to get back to already just since last evening. And Elijah, I'm not exaggerating. I'm not being sensational. And I think that this is an environment where you see the amount of demand going into the ETFs, the amount of demand going into the physical market, and yet the price has not quite behaved the way that we thought it will. All I can simply tell people out there is that the price, which is still controlled by the COMEX, is not indicative of the demand. And at some point, the only way that you can successfully manipulate price or a market is to push it in the direction that it is going. And I would submit that the amount of global demand into this market is unprecedented, and quite frankly, something I never, ever, ever thought I would see at this level. And I think these are very, very, very peculiar times, and I'm glad that we have all the demand that we do, Elijah. It's just I don't know what really to make of it, or what to make of it in the light of a price that has not exploded relative to the demand.
Kind of getting back to what caused all this, do you think it was mainly the Reddit frenzy that started with GameStop and then overflowed into other stocks and then finally silver?
Glad that you asked that question. There's the old phrase, the law of unintended consequences. I was talking to a friend of mine the other day who is a very successful businessman, doesn't own any precious metals, done very well in equities. And his comment to me was that he went completely to cash after seeing what had happened with GameStop and AMC and others. And because he was so concerned that the light popped into his head that he and his wife believe that the market is a rigged casino, that when the market took off the way it did, not even as much what a concerted effort by a group of traders can do to the market, but also maybe more disconcerting to him was the reaction by the exchanges, limiting the amount of shares that could be bought, for example, to one share in First Majestic, as that tried to be short squeezed. The point of it is that what the Reddit group did not only was legal, but it was finally beating the hedge funds and the big money at their own game. And while that was illuminating to many people that this could actually happen and that the market isn't as straightforward and germane as people think, but more so what the exchanges did to sort of rig the game in favor of the house. And I think that this had created the law of unintended consequences for a lot of people. Now, I've been talking, for the last several months about how even the most ardent stock bulls have to realize there is a disconnection between the economy and the performance of the equity markets. And here again, I would submit that these types of actions, whether it be a disconnection between the market and the economy, or in this case, maybe even more so, the reactions by the exchanges to not let the hedge funds suffer massive losses, to rig the ability of the exchanges to an outcome that wasn't fair. If the team was getting beat at their own game, then that's how the game should have played out. But the fact that in the case of First Majestic, when there was a short squeeze happening, that several exchanges limited what you could buy to one share or just shut down the ability to buy anything altogether is wrong. And so I think the realization here by many people is that this is a rigged game, that it is not safe, that the road to retirement is not just firmly paved with stock certificates and mutual funds. And a lot of people are waking up to that realization and are becoming concerned, even people who have no inclination to buy precious metals. So I think that, yes, the Reddit group definitely spurred on the initial demand, and it was fantastic. But by the same token, in the retail sector, now I think those people were buying SLV and GLD because we were seeing, in 2 days, Friday and Monday, 100 million ounces of silver deposited into SLV. That's so far record, it's not even funny. But I think the people that are buying physical is a different crowd because no one is selling anything. We saw a drive-by shooting last Monday, I believe, in the price of silver. 1.5 billion ounces of silver were dumped onto the market at the open. Elijah, that's 1.5 times global mine supply. This is done typically right after the PM fix in a very thinly traded access market as the price of gold and silver are moving from London to New York. And if you think about it, no one in their right mind, and we talk about this, and I've talked with you about this before, anyone out there who says manipulation doesn't happen, that spoofing that J.P. Morgan was charged with is and again, they should have been charged with a lot more, but spoofing is not manipulation. Okay, fine, whatever. But I'll tell you this. I would love for someone to come on this show and tell me how any entity looking to get best price discovery for what they're selling would be foolish enough to dump 1.5 billion ounces of silver into the market at the opening and tell me that is not done for anything but affect and to create a perception of reality. Many of the people, these Reddit people, they don't have strong fingertips. They haven't been suffering along with all of us hard money people for the past 2 decades. They haven't seen the swings in gold and silver the way that we have. That was done to scare the crap out of them and to knock them off the tree and to get them looking more at equities and not at gold and silver. But I will tell you something that I will believe till the day I die, and that is this market is rigged, and the only way to beat it is to continue to accumulate metal and pull it off of the market. Take possession of it. That is the only way to win. The only way to significantly continue to affect market price is to push it in the direction it is going. They cannot continue to knock the price down when there's this much global demand going into GLD, going into SLV, and literally obliterating the supply in the physical market. Look around. Right now, if I'm selling you Silver Eagles at $9.50 over silver spot, I am cheaper than anyone in America, and they're almost impossible to get. The Canadian Mint, the U.S. Mint, both of them are pretty much out of gold or way back ordered. You can't find it. The supply, which is normally plentiful, is disappearing. And I've been saying on this show and others, the market will define itself by an inability to easily source product. So what was done this week or last week was done specifically to create a perception of reality. There is no one in their right mind that would dump 1.5 years of global mine supply at the open in a thinly traded access market right before the open, except to scare the crap out of the new Johnny-come-latelys. And to some degree, I'm sure it worked. So, Elijah, these are very, very interesting times. It reeks of desperation. The price control reeks of desperation. They do not want to get overrun. And so I think that we have been given a gift by the fact that the price hasn't exploded, because if I had to tell you if price and demand were connected the way they should be, the price would be multiples higher of what it is. Because I was in Florida for 2 weeks when this started. I did not see the sunshine for 1 day. My family was out on the beach. I sat in a room for 14 straight days, truthfully, and did not leave, working from morning until morning. And it's a blessing, as I said, but the demand is way, way, way detached from the price, and that will catch up. Mother Nature will have a way of connecting the two again, and I think we're not far from that, based simply upon the level of anxiety and demand that I see coming out of this industry.
And you mentioned just the insane demand that we've been seeing, and other dealers around the country saw, especially last weekend when, we had to, and so many other bullion dealers had to shut down. I mean, is there any sign that this demand is letting up, or is it just as strong as it was last week?
Well, it's interesting, what you just said, and I'm going to explain what you just said. We talked about it last week, and I'm going to move that forward to this week. So first of all, no, the demand is not letting up, and it's just as strong as it was when I was in Florida. I was up last night. We're doing this on Super Bowl Sunday morning. I was up last night till, I don't know, I overslept because we were supposed to do this at half hour ago, and I apologize. I was up till 3:34 in the morning, working last night, sending emails, and some of you listeners out there probably got an email from me after 3 a.m. So thank you for your patience. But no, I don't see it letting up. And all those online retailers closed for one reason, and I explained this, but I want to touch on it again for anyone who missed it, because a lot of the distributors have done the same thing this weekend. And here's what happens. The market closes at 5 p.m. Central, roughly 4 or 5 p.m. Central on Friday, and then opens back up at 5 p.m. Central tonight, Sunday. And what happens is that when the market, that's the only time in a week that the market finds itself closed, right? I mean, During the week, there's a few minutes here and there as it moves time zones where it's closed, maybe half hour, 10 minutes, 5 minutes, whatever. But it's closed over the weekend. And so what that means is that the companies like us cannot hedge exposure. Let me explain. If I have a large inventory in stock, I will hedge every ounce of that so that I'm market neutral to market fluctuations. On Fridays, typically, my head trader will call me and he'll say, do you have any interviews like you and I are doing right now? Do you expect a busy weekend? If so, I need to position ourselves long into the weekend. So he'll buy a bunch of contracts. Last weekend, when everyone shut down, and we subsequently did on a Saturday evening, we were 55,000 ounces long, 11 futures contracts of silver into the weekend. What that meant was that I could buy or sell 55,000 ounces of silver over the weekend, and it would be covered when the market opened up on Sunday at 5. Problem was we sold 90,000 ounces of silver. And when the price opened up, we were 30,000 ounces naked exposed. And the market opened up higher, and it cost us almost $45,000. That's part of the game. You win some, you lose some. And we lost. And so the dealers out there were fearing that. They did not want to be naked short into the open because they were fearing that the market would gap higher, as it did. And even though you're able to fill quickly, bang, if it gaps higher when it opens, you lose. And so the distributors out there and the companies and the online retailers were saying, geez, there's so much demand. Look at the online retailers who post what they have in supply. They were all sold out. Everyone was sold out. And so the stuff that they had, they knew that they were going to get wicked demand over the weekend. They knew it would blow out what they had covered into the weekend. So they just said, screw it. We'll close down over the weekend. We'll open back up when the market opens up and we can hedge our position. Well, we've done the same thing this weekend. We are, in fact, even longer than we were last weekend because we're concerned about that. But a couple of the largest distributors in North America have told me specifically that they are not taking any orders over the weekend. They shut down their portals for that exact same reason. They are afraid of the market gapping up on Monday. So here again, the largest distributors in the world, the top of the food chain in terms of physical product, are fearing exactly what I'm talking about. They don't even want to take orders over the weekend because they are fearing a market gapping up on Monday and then being caught naked exposed. So this underlines the importance of hedging and of a market that allows you to offset risk. And if that mechanism is closed over the weekend, when there's so much demand, I would submit to you that the price that we are seeing right now, Elijah, on COMEX is many dollars below what the real price is. Like I said, every online retailer in the country is north of $10 or $11 over spot on Silver Eagles. Now, they may buy them back at 7 or 8 over, as we would, but that is what I'm getting at. If you can't buy an ounce of silver right now, even right now, if I sell a Britannia, a Kangaroo, a Philharmonic at $5 to $5.50 to $6 over spot, I'm cheaper than anyone in the United States. So what I'm getting at is, at a bare minimum, silver spot should be $5 to $6 higher. You cannot find anything in this country for under $5 to $6 over the price of silver, and it's getting harder to get. And most companies have not prepared. We have. I've loaded up on Britannias and Philharmonics to the tune of, I don't know, over 150, 200,000 ounces. And but when I sell out of that, I have no idea what supply looks like moving forward. And please, I know I'm kind of going on a tangent here today, but I just want people to understand I am trying to summon up as much sincerity as I possibly can. And this is a market that I've never experienced before, where demand and supply are just moving in opposite directions, and yet that should speak of a much, much higher price. And the fact that the price is being controlled by the COMEX market is so far detached from the amount of demand that is out there. I can't even begin to explain. And I just want to simply say that it is my gut belief that Mother Nature will win out over this, that supply and demand and their inverse relationship has to take hold at some point, or there'll just be no physical product left for any of us to get.
Well, Andy, thank you so much, I guess, just for everything that you've been doing this past week and all the efforts that, I mean, it's insane. You said, all the employees at Miles Franklin are working all day except for sleeping. I know for you, even the sleeping part is iffy sometimes, but we just really appreciate everything you're doing. And if people are interested in purchasing from Miles Franklin, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Andy, any last thoughts you'd like to add?
First of all, I thank you, Elijah, for helping getting the word out. I really do. And all our listeners out there as well. Yes, please do feel free to call and do feel free to send an email. I want to apologize out there for those people who have had to wait for us to get back to them. We will. We are working morning till night to get back to people. Certainly they can reach out to us. And I know we're working today here Sunday. We are taking orders. Elijah, I guess the only last thoughts that I have is in life, sometimes you have to ignore what your eyes are telling you and run with your gut. And I think this is one of those times. Remember, we are not selling gold and silver to become wealthy. We are selling gold and silver to protect us from what's happening to the currency, to the economy, and from the unknown. And I think that when you take a step back and look at what's happening on COMEX with the most sophisticated investors, the sovereign wealth funds, the family offices, they are draining the COMEX of metal. They're taking massive amounts of gold and silver off and taking delivery. When you see what's happening in the retail market, all the retail companies are blown out of product. When you see the primary distributors limiting and closing down their weekend online portals, when you see SLV and GLD taking in record inflows of metal into the market, and all of this is not blowing the price off the lid, do not become discouraged. Do not become discouraged, because in the end, the only way the market can ever be successfully manipulated is to push it in the direction that it is going. And I think we're winning the game, Elijah. We will come out on top. Those people who have been putting money into gold and silver, again, don't look at the price. I know that sounds somewhat insincere, but it's not. I've been at this game for 31 years, and if you look at the price all the time, it'll drive you crazy. Remember the story of the tortoise and the hare. If you look at what the metals have done since 2000, they've outperformed everything. Look at what silver did last year. Silver was up 50% year over year, up over 100% since March. And the reason nobody notices it is because it's very volatile and because cryptocurrencies have given us the illusion that that's how all investments are supposed to behave. All I can really say, Elijah, is trust your gut, have strong fingertips, hang on, continue to buy the dips, because I'll tell you something, if demand has anything to do with price, I expect the price to be many, many multiples higher, because we are running out of supply, not just coming out of a 300 million ounce deficit in silver last year coming out of the ground, but just what's happening here. We're running out of supply. The demand is going through the roof. The price will follow. Trust your gut, have strong fingertips, and hang on. And thanks for working with Miles Franklin. We do appreciate it. We take it very seriously. And thank you, Elijah, for helping getting the word out. I hope you have a great weekend and actually get to watch a little bit of the Super Bowl.
There we go. I hope the same for you, Andy. Definitely get some rest. And thank you so much for joining us today.
Thank you, Elijah. Have a great day, buddy.